In this quick video, I'm going to tell you how to get business funding in 2025, even if you have bad credit. This is definitely for you. If you're a business owner, you're tired of getting denied funding, this video is literally for you. So it's 2025, and the banks are now denying over 80% of businesses. It was bad before, but it's worse now. One of the most common reasons is having bad credit or a skinny profile. If you don't have a well built out profile, technically you have bad credit. If you're just putting hella AUs on there, but you don't have no cards in your name, technically you have bad credit. That's one of the most common reasons why these banks are declining people. They're denying people because people are defaulting, people are committing fraud, and the banks are just taking losses. So they're going to be like more aggressive with their criteria. So this is the reality. I'm always going to urge you to get business funding through using a good personal credit profile as a PG, but I'm not green. I understand the reality of life. I understand that sometimes shit just happens. Sometimes you might have a project where you're in a situation of, okay, I'm going to basically profit, but I need to get access to this funding right away. I can't wait for my credit to get fixed, right? So, in those types of scenarios, that presents an opportunity for lending. Alternative lending meaning it's faster. Alternative lending meaning you don't need a credit check, right? Obviously, there's pros and cons. We're going to talk about that. So, keep that in mind. I wanted to just show one of my clients that I got funded through alternative lending. So, as you see right here, I was told, okay, congratulations. They were funded and they were funded $165,000. And this was because the client had a credit situation where their credit wasn't the most ideal. So we needed to get them just basically like a bridge loan just to get through the situation that they were going through, right? And that was done in like that was done in like a few days or so. So it's less documentation, that type of thing. So it's 2025 and the banks are getting stingier, which is a bad thing. But you got to think about it when there's something that's bad, that means that creates a new opportunity for people when it comes to funding through alternative lending. So you got to think too, if you're watching this, right? You're literally a business owner. In business, we solve problems. So don't y'all think logically, like let's use logic here. Don't y'all think logically if we're all business owners solving problems, isn't it going to be a lot of business owners that have a lot of liquidity? They're going to think, okay, the banks are getting super stingy. I'm going to start my own alternative lending over here, right? Me understanding that as well, I'm connected to these people that can help you get these approvals, right? So this approval that we got was literally through one of my connections. And this is the thing when it comes to funding, it's not a one size fits all. Ideally, okay, you can go through the banks and everything, but like I said, everything isn't just like that. And a lot of y'all that's watching this, maybe you are in a situation where you do have bad credit, but you make money in your business and you just need to make that move. This is literally, the product for you. And I'm probably speaking directly to you. So the pros of banks obviously is usually better rates. The cons of bank though, it's going to be slower than alternative lending, obviously because the documentation is going to require a lot more documentation, higher likelihood to get denied as well. And then obviously credit. So a common myth, let's just talk about it. A common myth that people think is the banks always have better rates and that's just going to be your best option. So this is the reality. The bank will usually give you a better APR rate up front, right? That's what it's going to be. But you need to always look at the longevity of the loan and the lifetime of what you'll be paying for duration of time. Because sometimes alternative lending in a form of like a bridge loan is going to have a higher interest rate up front. Obviously it's going to be higher rate, but the payoff is going to be quicker. So it's not going to be as much when you look at the totality of it, right? So a simple example is like if you look at everyone knows about a car loan. Let's say you get a 60-month car loan. 60-month car loan, cool. Let's say your payment is 1,200 or something, right? You're driving a nice vehicle. Payment 1,200 for the 60-month. But let's say you take it to 72-month term, right? Now your payment is only $1,000. You're thinking, oh shoot, I'm better off with the 72-month. You're paying less up front, but you're paying more for the duration of it. So when it comes to alternative lending, don't always just think that every situation I'm going to be in, the bank is always going to be the better option, right? So this is literally a situation that I come across with clients sometimes. And when I first got into it, I was thinking, okay, alternative lending is always the wrong option. But that's not always the case, right? Revenue-based funding is not always the wrong option. So it really just depends on the situation. You just need something to get by real quick to make a move, and then, you know, that's really what it is. So let's talk about more common BS beliefs. The banks are the only ones giving out big money, right? So I don't know what you consider big money, but $165,000 to be lent out, it's not $2. It's not $20,000. It's a decent amount of money, right? So let's look at more. So you need to have perfect credit to get funding. Obviously, that's not true. Client here that got $165,000 at I think low 600 or high 500 or something like that, right? So keep that in mind as well. You have to wait weeks to months to get funding, right? Obviously, with the bank's documentation, regulation, stuff like that, that's what it could be. But this was literally achieved in like 72 hours, maybe 4 days or so. It was less than a week, right? So that was quick. All right. So, how to get approved in 2025 and no credit check needed? You just need to bring cash flow to the table. Nobody's gonna lend you money if you don't got nothing to the table. You can't just be like, "Oh, I'm starting up, just lend me money," right? Go look at CDFIs or some other stuff, right? But you got to look at it like, what does your last 3 month bank business statements look like in your business? For the purposes of what we're doing, the minimum is really 20K a month over the last 3 months to pre-qualify. The absolute minimum is like 10 to 15K, but really 20K a month is where we're starting to have a conversation. What does the last 1 to 2 years of taxes look like? Right? Have you filed those? You have an extension for 2024. We gotta, know all this information. Satisfying those, you can get approved in as little as a few days, as you saw my client up there. And then you got to think too, do you have a reliable plan to put this money to use? So my client that got the 165,000, he understood that this was just a bridge loan. He just needed this for I think it was like to pick up an additional project or contract or something, and it was going to pay itself within that period of time. He just needed access to the capital right away. So that was a situation where it made sense. Am I saying that every situation is going to make sense for this type of funding? No, you have to have a plan, right? So don't just look at it like, okay, 165,000 funded, let me just go get it, right? Some of y'all if you may you just need to focus on fixing your credit and then getting the funding. This is a whole corporation that we helped, right? This is a whole corporation that we helped, and they have a plan. They have a track record of what they've been doing. If you don't have a track record of what you've been doing, this revenue-based alternative lending might not be the thing for you. But I'm making this video for those of y'all that it is for, right? And we work with a lot of roofing companies. So if you're a roofing company, then if you have experience as a roofing company, then this might be something that's good for you. Maybe it's not. It depends on, what you're trying to do. We work with the roofing companies to help them with their marketing. Some of these roofing companies, you give them a call, they don't answer. Now it's hours before someone comes to them. The way business works, people contact people and then they'll move on to the next one. So you need to install systems. So we work with roofing companies as far as install like the AI and other automation setups and stuff like that. So if that's you, that's something we could do for you as well, besides the funding. But I say that to say you just got to understand, you got to look at your situation. Is this a situation where this loan will make sense? Because it is going to be a higher rate. Are you willing to stomach a higher rate for temporary because you know what it's going to do for the return? So that's basically what you got to look at. That's my whole point. All right, if you want my help getting approved, right? If you're in that situation, you don't need to be asking all these damn questions. You know, okay, cool. I cash flow. I have not the most ideal credit right now. Just book the call and let's talk, right? So click below to apply. PS also, if you're a credit repair business owner, if you refer clients to us for funding, you can make an extra at least 1,000 plus per client. So if you're a credit repair business owner and you have people that need to get funded and they sound like this, you can send them this video or just, go from there. And then we can hop on a call. You can book a call as well. And then we can talk about affiliate type of situation, right? With my connection. So with that being said, keep watching my videos. Y'all have a blessed one.